In this video, let's look at whether UK property investing in 2025 is really worth all the hard work. And by the way, you're going to want to stay around to the end because I've got a fantastic freebie for you that I know you're going to love. So, if we're being really honest, property investing today is more challenging than it was a few years back. There's now additional legislation, some fairly hefty tax changes, higher interest rates on mortgages, and landlords, frankly, in many areas are just leaving the market. It's therefore unsurprising that some investors are asking if property investing, or even being a landlord, is still worth all the hassle. And if you're now considering getting started in property, you may be thinking, have I already missed the boat? So let's talk about it. Let's talk about the good, the not so good, and whether property investing in 2025 still even makes sense. And let's start off with the not so good. Surely one of the biggest challenges today is the situation regarding tax, and in particular, the impact of Section 24, which, if you're not aware, means that mortgage interest payments are no longer fully deductible as an expense for individual landlords, which I personally think is ridiculous, but we won't open up that can of worms. So if you're buying an investment property in your own name today with a mortgage, you'll likely be paying more tax. For this reason, most investors are now using a limited company structure, which has its own pros and cons and certainly isn't right for everybody. In fact, I've got a video coming out on this soon, which you want to keep an eye out for because you'd find that really helpful. There's been some huge changes in legislation at all levels within the industry, especially with the upcoming Renters' Rights Bill coming out. Now, I have to say that I think some of these legislation changes are actually a good thing, but many are not, depending on the strategy that you're following. But either way, these legislation changes are certainly going to have a really big impact on our market. Interest rates are higher today, which obviously means your mortgage payments will be higher, and as a result, your cash flow or monthly profit may be tighter. So, if you are investing now, you need to run your numbers really carefully, and we're going to be coming onto that in a second. Then there's the energy side of things. Now, the government has previously announced, as you may be aware, that rental properties will need to meet a C rated EPC, which stands for Energy Performance Certificate. Although the deadline for this has been pushed back, I don't think it's going away. And so if you're looking to buy older investment properties, there's a good chance you're going to need to upgrade the insulation, the heating, the electrics, etc., all fairly soon. Or better yet, in my opinion, you should be planning into your refurb now. Now, I know all of this sounds really, really negative, but despite these fairly hefty changes in the industry, the fact remains there are still so many fantastic ways that you can build lasting wealth through property. You've just got to take a more strategic approach to your investing. And by that, I mean, in my opinion, just going out and buying a normal house or a normal flat at the asking price and letting it to a single family unit probably isn't going to help you on your way to financial freedom, which is surely the whole point here, isn't it? Plus, your money's going to be tied up in that house or flat for a very long time, probably giving you a poor rate of return, and mean you can't use those funds to invest elsewhere. But now, what if you could find a very similar property in a similar area at a huge discount, refurbish it, then refinance it within 6 to 12 months to pull all or most of your money back out of the deal? So you could then use those funds to invest in the next property. Now that's strategic thinking, and Liana and I have done this many, many times. And goodness knows, if we can do it, you can certainly do it. But thinking beyond single lets, believe me when I say there are loads of other strategies to choose from, some of which may enable you to hit your financial goals much, much quicker. For example, houses of multiple occupation, or HMOs for short, which is one of our personal favourites. This is where you rent out individual rooms in a property and have the potential to create a far greater cash flow. Or commercial to residential, which has a whole load of advantages, and we're going to be talking about that in a future video. Or rent to rent, which can quickly enable you to replace your day income. Although in my opinion, rent to rent only works in a very specific way. And again, we'll be talking about that later. Then there's serviced accommodation, options, freehold to leasehold, pulse investing, sourcing, etc., etc., all of which we're going to be covering in depth on our channel. So we're giving you the best possible chance of making property work for you. By the way, if you find this video helpful, it'd just be awesome if you could click on that like button. It really helps our channel if that's okay. Now, apart from us trying to help you nail down some great cash flowing properties, the other thing I think we need to keep in mind always is that property is a tangible asset that always goes up over time. Sure, we're going to have dips or corrections, but the long term trajectory is always up, and we sometimes forget this, in my opinion. And of course, with property, you get to use the power of leverage, which means that in most cases, you're not buying that property with your own money. You're going to put down a deposit, which in some instances doesn't even have to be your money. And then, if that property goes up in value over time, you benefit from the entire increase on that property, not just the growth on any deposit that you put in. That's a massive advantage over many other types of investing strategies. Something else that's really interesting about the 2025 market, as I mentioned earlier, is that many landlords are now selling up, and there's a number of different reasons for this. But crucially, this creates an opportunity for you to nail down some incredible deals if you know where to look and what to look for. Basically, there's less competition for those types of properties, especially with certain types of property investment, which means that you've got more negotiating power. It also means you can be choosy. You can look for those deals where you can add massive value. So you can refinance to pull all or most of your funds back out again quickly to use again in that next deal. Now, there's loads of ways that you can add massive value, and we have a video plan that's going to cover all of these. But the key to being successful in property, in my opinion, is knowing how to stack a deal. And this is probably the most important point that I want you to take from this video. You see, this is not the kind of market where you can simply give it a go. You simply must know how to run the numbers. And that means sitting down before you buy that investment property and accurately working out all of your purchasing costs, your refurb or development costs, what your refinancing costs are going to be, the income that you're going to get from any rents coming in, and don't forget to factor in any voids, ongoing management or maintenance expenses, etc., etc., etc. Now, I know all of this sounds a bit overwhelming, but I've got something really special that I know is going to help you. Before I filmed this video, I actually sat down and worked out all the costs that I could think of when buying and refurbishing and letting a property, and I put it on a free spreadsheet that I'd like to share with you. All you got to do, simply click on the link here and you can have it straight away. Ultimately, though, you need to know, being as accurate as you reasonably can be, how much that property is going to cost you and how much cash flow it's going to put in your pocket each month after expenses. You can then work out accurately what your return on investment is going to be, and is that deal worth doing? This one habit of properly calculating the numbers before you buy will set you head and shoulders above most property investors. It also means you'll be far more likely to go out and do deal number 2, deal number 3, then 4. And after investment property number 4, I kind of think you got it cracked, which out of interest is why I called my business Your First 4 Houses. So what do I think? Is property investing still worth all the hassle in 2025? Absolutely, 100% yes, if you're being strategic in your approach and focusing entirely on finding those exceptional deals, because there's plenty of them out there if you know what you're looking for. So we're nearly at the end of this video. Before I go, I want to share one, I think, really important point with you. You must always remember that when you buy an investment property, you're going to work really, really, really hard once. And that property is then going to put money in your pocket forever. You then go out and buy investment property number 2, and you work really, really hard again. And once again, that property is then going to put money in your pocket forever. And in many ways, this is a bit like having cash machines. You're going to get cash machines that are going to put money in your pocket forever. Honestly, if you do this a few times, and trust me, you don't need many of these, one day you'll wake up and realize that as that last deal goes through, in that moment, you've become financially free. And believe me when I say, that is an incredible feeling and something I absolutely want for you. Thanks so much for watching this video, and don't forget to grab that copy of the spreadsheet because I know it's going to help you with your next investment property. Thanks again, and I look forward to seeing you in the next video.